Hello everyone, welcome back to this channel. It's your boy Mayor the Peeps Coder. So in today's video, I am going to cover technical analysis alongside with top-down analysis. So do not get it complicated. These two things work hand in hand. So just like you adding one thing to other, adding one thing to another to bring out a better result. So if I want to, in a low term, if I want to explain technical analysis is a trading discipline that forecasts future price movements by analyzing historical market data. You understand? While top-down analysis is a method that starts with the big picture, economic outlook. You understand? The big picture of the market, economic outlook of the market. You understand? So the both things work hand in hand. So you get to understand it get when we proceed further. So analyzing the market. Over the years, many methods and approaches to analyzing and trading the forex market has been developed, but in all, they are divided into two broad branches, with a more recent consideration to a third rather. So the number one there is technical analysis. Number two there is fundamental analysis. And the third one is sentimental analysis. So as I have explained the technical analysis, which is what we are going to look into today. So further note or alongside the fundamental analysis is a method of evaluating an asset. So we are not going to talk about this fundamental analysis and sentimental. We are basically focusing on the technical analysis because that is the most or the viral analysis most traders have been using. And as a newbie, as you are coming into the industry or the community, you are going to focus on technical analysis only because fundamental has to do with the world event economy, so on and so forth. While sentimental talks about your psychology, your emotions towards the market. So we are only focusing on the technical analysis, how to break down the historical market data. So let's proceed. What is technical analysis? This is a very popular way of analyzing the market amongst many traders. This method uses charts to study price movement based on information from the past. So you can understand now the purpose of technical analysis is to forecast future price movement from from past data. You understand? Like using past data to forecast future price movement. You understand? Because if you are on your chart, they normally say if you are on your chart, you are supposed to always look at the left hand side of your chart to understand whether this market is retracing to a particular point for you to take a buy or a sell. So that is why you need the past data to forecast or to analyze the future price movement. So understanding the chart. Different chart types can help you analyze price action. The three main chart types are: one, we have line chart; two, we have bar chart; and then third one, we have candlestick chart. So the first one is line chart. This is the simplest type of chart. It is a single line that connects the closing price of the particular asset over a given period of time. So if you are analyzing your chart and maybe you are a trader that trade with a one particular strategy called support and resistance, this line chart will help you to map out your support and resistance correctly, and it makes it simple for you. So the next one here is bar chart. This is a more detailed chart. It is known as the OHLC chart since it depicts the open, high, low, and close of price movement over a given time frame. Actually, most traders does not use the bar chart, but some traders use it. You understand? So we move to the next one, the more visual one that people normally use. So the third one is Japanese candlestick. This is a more visual bar chart. It has the same information as the bar chart, but in an easier way to read, it is the most widely used chart pattern amongst traders. So the candlestick chart is the most widely used among traders. So I want to show you on the live chart. Okay, let me go to, so on the live chart here, this is a candlestick. This is a Japanese candlestick chart. So if you want to look at the second one, the first one we talk about, sorry, the first one we talk about, this are the line chart, and the third one is bar chart. You have them all on your trading view. So you can see other ones, other types of chart you can use. We have line with markers. We have step line. So the most used ones are these top three: the candlestick chart and the line chart and the bar chart. So we move further to the next one. So now the next one is top-down analysis. Top-down analysis, this is simply carrying out your analysis on different time frames. That is why it is called top-down analysis. Starting from a higher time frame down to the lower time frame you wish to take your entry from. You know, most people, most traders, that's why I talk about style of trading in my previous video. Style of trading, you can decide to be a day trader, you can decide to be a swing trader, you can decide to be a scalper, you can decide to be a position trader, depending on what you have at hand. Maybe you are a busy type, you choose a kind of trading style that will suit your daily activities. So if you want to trade the 1 hour time frame, you could start your analysis on the daily, then 4 hour, and finally to the 1 hour time frame. This enables us to see the bigger picture and then to trade in line with the overall momentum. So sorry. The next one is for position trader. Now this is what I talk about in the other picture, depending on the style of trading you want to take. Now, as a position trader, the monthly time frame would be used for identifying market key levels, that is major support and resistance. The weekly time frame would be used for identifying the market trend and overall momentum, while the daily time frame would be used for entries, that is identifying breakout, test or retest of chart pattern and candlestick patterns. So this is for position trader, people that can hold trade for a month and years. So that's it for the position trader. Now, for a swing trader, the weekly time frame would be used for identifying market key level, that is support and resistance areas. The daily time frame would be used for identifying the market trend and overall momentum, while the 4 hour time frame would be used for entries, that is identifying breakout, test or retest of chart patterns and candlesticks. The same thing on a day trader. The daily time frame would be used for identifying market key levels, major support and resistance areas. 4 hour time frame would be used for identifying the market trend and overall momentum. The 1 hour time frame would be used for entries, identifying breakout, test or retest. The scalper, the 1 hour time frame will be used for identifying market key levels, major support and resistance. The 30-minute time frame will be used for identifying market trend and overall momentum. The 15-minute or 5-minute time frame will be used for entries, identifying breakout, test or retest of chart patterns and candlestick. So let me quickly take you to the live chart so I can be able to show you all these things from, let's say, for example, I'm a day trader. So let me show you how to identify your key level, and then from there to the 1 hour time frame to the 4 hour time frame, and then to understand how to identify the market trend, and then move to the 1 hour time frame for your entry. So this is my chart. Let me take it to here. All right, this is my chart. Let me quickly take this off. So when I open my chart like this, anytime I come to my chart like this, I quickly go to the daily time frame because I am a day trader, and also I swing. You can you can hold your trade for 1 or 2 days. That doesn't change anything. You understand? That doesn't change anything. Now, this is my daily time frame. As a trader, you come to your chart. What the first thing you want to identify is where the market is going to. Is the market trading up or the market is trading down on the higher time frame, to know your overall movement, to know your overall momentum. You understand? So this is my daily time frame, and the daily time frame is showing me that the market is bullish. I am bullish. You understand? So what I'll have to do here is, as a day trader, I do not map out point of interest on the daily time frame because I am not a position trader. I am not a swing trader. I'm a day trader. Now I go down to my 4 hour time frame. When I go down to my 4 hour time frame, and then I'll still have the market bullish in front of me. I will still have the momentum bullish. So I will still want to um break down the market. I will not just take entry or map out my point of interest like that based on my risk management. That is another thing you need to have in mind. Based on your risk management, you need to break down your point of interest. You understand? Some most traders call it refinement. So you need to refine your chart since you are a day trader, both with the swing trader, any style of trader you are. So you need to refine your chart. That is why you have to do a top-down analysis from a higher time frame down to the lower time frame. You take your entry for you to be able to have a better picture, a bigger picture of the market. So when you come to the chart, when I come to the chart like this, and then still find out that the market is bullish, and then I'll go down to my 2 hours time frame. So as you can see, I'm going down and I'm reducing my time frame for me to be able to refine my entry. You understand me? For a better setup and to minimize my risks. You understand me? So if I cannot get a clear setup on the 2 hour time frame, I go down to the 1 hour time frame. Now on the 1 hour time frame, I have this. You understand? I have this. So I am going to end this video right here because we have a lot to talk about before talking about any strategy. You understand me? I have a lot to cover before I can talk about any strategy, because if I should continue from here, if I should continue right now here, I am going to talk about the strategy I used to take this particular trade. But I'm not going to continue anymore. I'm going to end this video here, and then we'll continue in my next video. So in my next video, I am going to talk about other important things like support and resistance. We are going to cover support and resistance and others. So this is all for this video. Thanks for watching this video. Please subscribe to my YouTube channel. I will continue dropping videos like this every week until we get to a point that we will be taking trade together. So do not be in a rush if you are a trader. Do not be in a rush if you are a beginner trader. Take your time, do research, learn from this video, read all these slides. You understand? Revise all these slides, go online, make research about something, and if you wanna try, if you wanna understand some things that has to do with a MetaTrader 4 or 5, you can download your MetaTrader 4 or 5 and then create a demo account with it, and then you can use that to ride on. So thanks for watching this video. See you in my next video. Please do not forget to subscribe, like, and comment. Peace out.